I have made over $60,000 this year so far, and every single trade I've taken has been within the first 90 minutes of market open. Being able to only trade for 1 to 2 hours a day and then being able to do whatever you want for the rest of the day is a reason why we trade in the first place. So in today's video, I'm going to share with you one strategy that I use right off market open to help me produce consistent results in the market. Alrighty, so the strategy that we're going to be talking about today is what's called the opening range break, right? The opening range break is a strategy that is used right off market open within the first 30 minutes, right? A lot of traders will trade the 1 minute opening range break, the 5 minute opening range break, or the 15-minute opening range break, right? This strategy is used right off market open and it allows you to capture the volatility and the price movements in a very short period amount of time. The good thing about the opening range break is it requires minimal preparation coming into the market open. All you have to do is look at the charts, analyze price action, see what price is doing right off the gates, and then take your trade based off that. So it requires minimal preparation, right off the open. So it's a very quick moves, right? You know if you're right or you're wrong, and then you can move on with the rest of your day. So with that being said, let's dive deeper into what is the opening range break. So the opening range break is a trading strategy that is used close to market open to capture the volatility in price. As I mentioned, the opening range break essentially happens right off market open, which is at 9:30 a.m. Eastern Standard Time. So we're looking for that opening range break. It can be used in the 1 minute, 5 minute, or 15-minute time frames. The strategy includes marking out the high and the low of the candle, and whatever side it chooses to break out is usually the general direction of where the market is going to go, right? So a lot of the times, right, we have an opening range, and once we break out the range, we'll start trending in a general direction, right? So after the range, what we usually have is expansion, right? We either have consolidation and then we have expansion. So that's where the opening range break comes in, right? It's very quick right off the gates, and whatever size it break out to, we'll be looking for continuation either towards the upside or the downside, depending on which way the stock breaks its opening range. And you might be asking, what does their opening range break look like? As you can see in this example right here, I have the opening range high, which is the top of the first candle, and then you have the opening range low, which is the bottom of the first candle, right? This candle right here can be a 1 minute candle, it can be a 5 minute candle, a 15-minute candle. You can be whatever candle the time frame that you are on specifically. The best opening range breaks, in my opinion, occur on the 1 and 5 minute. So now I'm going to be talking about different types of opening range breaks, right? As you guys know, there are plenty of different time frames that can be used when trading the opening range break. One of my personal favorites, as I mentioned, is the 1 minute opening range break. The 1 minute opening range break refers to the first 1 minute high and low of the New York session market opening. Once the price breaks the high or the low of the first 1 minute candle, you can take an entry targeting previous day low or previous day high. What the opening range break is good for is it can provide an indication of where price wants to head for the day. As I mentioned, right, when price usually breaks a certain range at market open, right, and it breaks to either one side, we're going to have a potential indication of a trend for the day. And as I mentioned, the next opening range break is what's called the 5 minute opening range break, right? This is the next time frame that I use. And the 5 minute opening range break is essentially the exact same thing, but it's on a 5 minute time frame. So the 5 minute opening range break refers to the 5 minute candle of the high and low of the New York session market open. So when looking for the opening range break, these are some things that you have to look for. And there are 4 key things, right? The first one is being unmitigated liquidity, right? I like to look for previous day high or previous day low that have not been taken out. So that's what's called unmitigated liquidity, when price has not taken that level out in the pre-market. Other things I like to look for is a clear draw on liquidity, right? This means we have a clear old high or old low where we can look to target on the higher time frames. So on the lower time frames, when we enter in off that opening range break, we can look to target those old highs and low lows on those higher time frames. Third, what I like to look for is a clear opening play. As you guys know, the opening range break is based off of market open. So usually this coincides with either a gap fill, an opening drive play, a dip and rip, a pop and drop, right? I usually like to have a combination of one of those opening plays within the opening range break, right? That's what gives it the high probability opening range break, is when there's multiple confluences and it also coincides with a gap fill or an opening play. And the fourth thing I'd like to mention is that the opening range break happens right off the gates, right? It's very quick moves, right? Usually based off of the 1 and 5 minute time frames. So what you guys have to understand is that there's a lot of volatility right off of market open, especially within the first first 30 minutes. So if you do not like trading within the volatile price action and you don't understand the direction that price is most likely going to head, I would advise you to either one, go on to the higher time frames or wait for price action to develop. The best case scenario is if you're on the 5-minute time frame, you wait for a 5-minute retest of the opening range break, right? That will give you more confirmation and indication of where price is most likely going to head towards next. So with this being said, now I'm going to be going on to the examples that I have for us today. Okay, so we're on my first example on the day, which is on NVDA. You can clearly see that we're in an uptrend, right? Clearly see that we're making higher highs, higher lows, higher highs, higher lows. You can see that we're very bullish in the markets, right? We're gapping up and we're continuing towards the upside, right? As you can see, that was the previous day. And then on this day as well, right, we have a gap and go towards the upside as well. So now when we go into the lower time frames, we're going to be looking for continuations towards the upside. As you can see right here, we're at market open, and once the first 5-minute candle closes, we can mark out the opening range high and then the opening range low, right? So this is going to be used as our opening range break. In this case, if price wants to break towards the upside, we're going to be looking for moves towards the upside, right? If price wants to break towards the downside, we're going to be looking for opening range break towards the downside. In this case, obviously you can see we're in bullish structure, so we would prefer if we were looking for an opening range break towards the upside. So as you can see right here, we play the next candle. As you can see, we finally have that bullish candle towards the upside, right? So we have a close above the opening range break. In this case, right, what I personally like to trade the opening range break is I like to look for retests, right? I don't like buying breakouts, so I like buying the retest. So what we're going to be looking for is that opening range break, and then we're going to be looking for that retest of the opening range break for continuation towards the upside. So you can see right here, this was the opening range high on the 5-minute time frame, right? Now we'll look for a retest of this key level. We can enter in right here, as you can see, on the top of the opening range candle, and then we can have stops at the bottom of the opening range candle, and then we could target a 2-to-1 risk to reward ratio, right? As you see in this example, right, price comes all the way down, almost comes towards our stop, right? Never comes towards our stop, right? And then ends up reversing back towards the upside. You can see it taps this opening range again, right? Now we get below it, we use this as a retest, and then we continue back towards the upside. And you can see right there, right? That would have been your 2-to-1 risk to reward ratio, and that would have offered you a very nice opening range break towards the upside, right? You can see that this was a very nice opening range break on the 1-minute and 5-minute time frame. You can see on the 5-minute time frame, right? We ended up coming back and we ended up retesting this opening candle, right? You can see we ended up wicking below this opening candle range high, right? But as I always talk about, the wicks do the damage, bodies tell the story. So you can see that price ended up wicking below, right? But it was inside our opening range, but the body candle closed above the opening range high. So you knew that this was a very bullish stock, and that's why I ended up continuing towards the upside, right? So you can use the opening range break with the 1-minute time frame and the 5-minute time frame in combination with one another with higher time frame context, which will allow you to make it a high probability opening range break. So now I'm going to be going on to the second example that I have for the day. So right here, you can see we're on my second example, and this is on AMD. You can see that we had a very clear support and resistance level, right? So you can see in this example, right, we use this as resistance, we got above it, right? We use it now as support, but now we got back below it, and now we're trying to use it as resistance. You can see the candles right here, right? Tries wicking above it, rejected. Wicking above it, rejected, right? So now we're consolidating, right, underneath the rejection point. So we're expecting a potential push down back towards this 164 level, which is that previous all-time highs level on AMD. So coming into this market open, right, we're going to be waiting to see what price action wants to do coming into market open. So as you can see right here, the market first opens, right? We have a gap up in the market, right? Whenever we have a gap up in the market, there's either two scenarios that are going to happen, right? We're either going to have continuation towards the upside, which is called the gap and go right here, or we're going to have what's called the gap fill, right? And the good thing about the opening range break is it can allow you to tell you what type of move that the market wants to do, right? That's why you don't have to have a bias when it comes to trading the opening range gap, right? You can look at price, right? You can analyze price and then base your trade thesis off of what price action wants to do, right? So you don't have to have a bias coming into market open. So you can see right here, this is the opening range of the first candle. So we'll mark out the opening range high and we'll mark out the opening range low, and we'll see what price wants to do. As you can see right here, we have a second push candle down into the previous now support, right? So we'll see if we can use this level as support or if we're going to want to continue towards the downside. As you can see, we have another bad reaction candle, right? We have no strength off of this previous day high, right? So most likely we're going to end up continuing towards the downside. You can see in this candle, right, price is trying to reject off this opening candle range low, and we'll wait for the next candle. And right there, the next candle right there, there's no buyers that are stepping in off of this previous day high, right? When we have no buyers that are stepping off of previous day high, which is that gap and go, that means we're most likely going to go and continue towards the downside for the gap fill. As you can see in this case, right, we have one rejection, two rejection, right? And now we have the confirmation candle. In this case, right, we can end up shorting it here, right, off of this opening range candle low as well, right? Stop can be just a break above, and then your targets in this case can be a 2-to-1, right? So your first target can be this gap fill, right? And then your second target can be these lows right here, which will end up being that 2-to-1 risk to reward ratio. So you can take partials right here, and then your final profit target will be right there. And now we'll play out the tape. And right there, right? So right there, you would have ended up having your 2-to-1 risk to reward ratio on AMD. This is a perfect example of how the strategy works, where you can have no buys coming to the day, right? You can strictly base it off of price action. You don't have to have a higher time frame bias, and it happens right off market open. So you know if you're right or wrong right away, which makes the strategy perfect for people that like to trade right off the open. So now I'm going to be going on to my third and final example for the day. As you can see, I'm on my third and final example of the day, and this example is on the QQQ, right? The NASDAQ, right? As you can see, right, we have a huge gap up in the market, right? Whenever we have a huge gap up in the market like this, right, usually we do not want to be looking for longs because price is already way overextended, right? It's already gapped up so much. So any longs will be bad risk to reward ratios, right? So now we'll look to mark out the opening candle low and then the opening candle high, and we'll look to play out price action, right? As you can see, the first 5-minute candle range, right, tries to wick above, but the body candle closure is below, right? So the thing about the opening drive play is you want to wait for confirmation. What we want to do is wait for a body candle closure above the top of the wick or a body candle closure below the bottom of the wick, right? That's the confirmation that we need. So you can see in this example, right, we're inside the range so far on the first 15 minutes, right? We have not broken to either side. And you see the first 20 minutes as the same thing as well, right? We still have not chosen a direction that price wants to go, right? So we're now waiting for that closure above or below that opening candle. And we finally get it here. You can see that we finally have a 5-minute candle closure below the first opening candle. Now we can go on to the 1-minute time frame to look for entries. So you can see in this case, right, this is the opening candle low on the 5-minute time frame. This is where we're going to be looking for potential shorts towards the downside. It also coincides with this imbalance here and this order block. So there's a lot of confluences here that makes it a potential good area to short off the markets. So we're going to have a stop right here just to break above, and then we'll target as well. We always target a 2-to-1 risk to reward ratio. So you can see in this example, this is a 2-to-1 risk to reward ratio. So you can see price taps back in, right, perfectly into the opening candle range low, which also coincides with the 5-minute, right, perfectly the 5-minute candle opening range low as well. So you can see price taps back into this level once more, right? So signaling that there's confirmation that this level is very key. And as you can see here, right, price ends up taking its time, but it ends up eventually gravitating lower, and this would end up being a very nice scalp towards the downside. This would have happened right within the first 30 minutes, right? A very nice trade, right? This was a 5-minute opening range break in combination with the 1-minute opening range break as well, right? So we can use the 1-minute and the 5-minute in combination with one another, right? The higher time frames, the better, right? The more confluences, the better. And that's exactly how you guys can use the opening range break to make money in the markets. So I hope you guys enjoyed that video. If you did, make sure to drop me a like and subscribe, and I'll see you guys next week. Peace.